Partners.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Babe Ruth, and you'll hit a home run. I mean, a big home run. Yeah. And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Everybody, Tommy O'Brien coming to you live from TFNN. January 2nd, we kick off the afternoon with markets in two-way action. S&P's right now, 6,900 on the dot. We're up by 8 points. You're up by 0.1% right now. We had a little bit of selling out of the gate. You catch a bid in the market over the last couple hours or so, 30 points to the upside on the S&P's, and you get the Dow leading the way right now, up 0.6%. Russell really leading the way up a full percentage point. NASDAQ, after accelerating out of the gate to be the leader, up to 25,800. We've sold off a bit, and you got the S&Ps up by 8 points right now. We take a look at the volume in the indices. It's still holiday trading, okay, but as you can see, a little bit more normal than anything else. Christmas is special. New Year's, it's nice. It's no Christmas. And now, even talking to other people, this Friday does not feel like the Friday after Christmas. Almost feels like a Monday. Feels like we just had a weekend. As in, we're kind of right back, right? It's great, though. You got 1 day back, and then we got a weekend. But volume-wise, yeah, we got volume that's going to be the most volume since December 19th on the S&P. So things getting a little bit more back to normal when it comes to volume right now. And you got the S&Ps up by 10. NASDAQ 100, similar action. It's going to have the most volume back to December 19th, potentially even more than that. We got an hour left to go in trading. You're down by 0.2%. The Dow, check out that volume spike. We're up by 298 points. We'll jump around to the Dow in a moment. You got the Russell. Not quite as pronounced on the volume, but leading the way up by 1.1% right now. And we jump over to metals. You take a look at the volume on the metals. Now, metals took nothing off, right? As in the Monday back from Christmas, there was no lapse in volume whatsoever. Everybody was trading metals. So today, actually one of the lightest volume days we've seen in metals, even as you get some price movement. You have gold, as I mentioned at the top there, of the 3 o'clock update, gold down by $85 off where we were at 8 a.m. this morning. So things look like we were catching a bid yet again. Silver right now at $71.52. In my morning program, you were solid $2.60 higher for silver. Platinum's held up well. You're still up by almost $100. You hit a low Wednesday, $19.27. We're more than $200 off there. And copper's calming down for sure. Copper within 1 penny of where we were. You were higher, though. You were up to above 574. You're at 569 on copper right now as well. We jump over to Tesla. Tesla, with their deliveries today. And what's remarkable, I said, the number, I think it comes in about 418,000. Let me see, where are we? Did I peg it right? 418? 428. 428,000? No, is that their estimate? Forgive me. Nonetheless, this was the first quarter that they had to meander without that $7,500 credit. Can't imagine trying to sell a vehicle in the month or two. Now, things will dissipate, right? A year later, it won't be as big of a deal. But in the immediate quarter, yeah. And yeah, they're no longer the top seller of electric vehicles, but that path has been on trajectory for some time. And BYD, full year, 2.26 million EVs. Tesla, 1.64 million. And there was the ramp up. That was the end of $7,500 credit. I mean, think about it. That should have been that's like almost like a going out of business sale. Sell everything, right? If you can sell a car, now's the time to do it. And now it's on the air. If you were thinking about buying a Tesla, that was the time to do it. And they still couldn't get it above 500,000. But of course, Robotaxi is in focus on Tesla. Yeah, and how about that trajectory? BYD battery electric vehicle deliveries. I mean, look at Tesla. They knew this was coming, man. As in BYD is an upward trajectory and Tesla is just flat. This time 2 years ago, analysts were predicting Tesla would deliver more than 3 million vehicles. The average estimate is now 1.8. Energy storage accelerating. Almost 15 gigawatt hours. But yeah, Tesla down by 1.9% today after opening. And in the pre-market, pushing 462. You're at 441 right now, off by $8. We jump around to the big dogs. NVIDIA holding up well, but we sell off from where you accelerated to. NVIDIA up by 1.3%, up $2.48 at 188. Obviously a big year, 2025 for NVIDIA. We jump over to Microsoft. How about that for some volatility today? Microsoft down 2.3% after opening in the green. Google shares up 0.5%, but Google just traded down almost $11 intraday from where it was. Amazon, same deal, from 235 to 226. There is some selling going on in this market, folks, okay? And it's remarkable, it's been a heck of a run. And just make sure when you're out there trading this market, okay, if you're trading, whether you're trading direction, daily investment vehicles, okay, whether you're just short-term trading yourself, you're trading options out there, I encourage you to put stops in play because I think we're going to have a great year that's going to have some volatility. I mean, realistically, look at this market. We haven't had real volatility in a while. This has just been an upward market with the one acceleration in February, okay? Well, I think that's going to be a little bit more difficult to maintain. And realistically, this market has been a bull market since 2009, man. You went through some periods that are blips on this chart. We, of course, had COVID. We had the acceleration in 2022 when the Fed began to hike, and then you have the tariff volatility. Folks, you're talking about from 2009 to 2026. That's 17 years, and realistically, and yeah, you have more in there, okay? They don't look like a lot right now, but in 2011, you went from 1371 down to 1065. That's a 25% pullback, okay? Zooming in again. And then, of course, you had what? The taper tantrum. Is that 2018, I believe, when you go from almost 3,000 down to 2,300? Yeah. Okay, that seemed, but I imagine, with yields in focus, the dollar in focus, just set your stop because we got some selling to kick off the new year. That's for sure. And where's it coming from? I'm not quite sure, but we got some selling. Yield's not moving dramatically, okay? Got a little bit of higher yield right now. You got a little bit stronger dollar. You have a VIX that's sitting at a 1458 handle. And meanwhile, we have some of the strongest equities in the world intraday coming down 3% like it's nothing. And I just think that's setting up for a little volatility. All right, folks, we're coming back. S&P's positive by 9. Take a look at some equities. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. You got Microsoft down by 2.4% right now. We jump over to Google shares, up 0.3%. And yeah, it just has not stopped. And it has. This is an hour chart. Okay, 60-minute chart. But it was quite a cascade right until the lows of about 1 o'clock. 470. We're at 472. You take a look at the daily volume. Okay. And we're going to have some volume, but we're probably not going to break these lows we had back here around Thanksgiving. November 24th, you're down there with about 34 million shares on a daily. We're doing 17 today, right? So it's a little bit heavier volume than the Christmas week, but all things considered, still dealing with some holiday trading. But boy, price-wise, just ripping lower. We're down by $11. But yeah, we were as high as 486. You just trade down $16, more than a 3% decline over the period of a few hours. Take a look at the volume on NVIDIA. Yeah, light volume. It's a holiday day. All right, 2026. The Fed is going to be an important part of how this year breaks down. The next meeting, 26 days from right now. And the market right now, assigning about an 83% chance that the Fed's going to stay right where they are. 3.5 to 3.75 is the current rate, is the current probability, is the current overnight lending rate, and the probability about 83% chance. 17% chance that they cut by 25 basis points. Now, a week ago, it was as high as 27% that they cut. You fast forward to the March meeting, still a 50% chance we're right where we are, so that would mean they stay put for the next two meetings, but almost a 50% chance we get one cut by then. So right now the market is signing almost a 50% chance we get one cut over the next two meetings, and then by April, finally we get a preponderance, as in 45% for one cut, but still almost 50-50. There's still a 40% chance that we get no more cuts from Powell. We'll see how the jobs data lines up. The inflation data has not been as hot as they're worried about. If anything, the jobs data has been worse than what they're worried about. Then you go to June, which is the first meeting that will be a new Fed chair, and the market still thinks we're at one cut from right now. You go to July, and it's still split from 1 to 2 cuts. Okay, I'm going slowly meeting by meeting, but we're 5 meetings out right now, and it's pretty much equally split between 1 and 2 cuts, right? almost like a normal bell curve, as in the middle is 1 to 2 cuts. But guess what? Now, what does the world look like if we are 2 meetings into a new Fed chair and they have not cut yet? The world looks like we got inflation, man. And the market's putting that at 12%. And yeah, there's a risk. But I find it hard-pressed that we're sitting at 3.5 to 3.75% by the July 29th meeting. And if we are, then we're going to need it, because I can't fathom what it's going to take on a short-term basis. Now, if things really get out of sync, I think the new Fed chair, hopefully at least, will have the ability to rein that in, right? You 2 mandates, price stability and full employment. If price stability is running amok and a problem, but pressure is going to be on yields when the market right now is thinking there's still almost a 50% chance that we are at 0 to 1 cut by the July meeting. Okay? You go out to September and finally it tips to 2. But even by September, that's 3 meetings into a new Fed chair. The market's putting that at almost a 1 out of 3 chance that we have no cuts or 1 cut. I mean, at a minimum, I imagine we get no cuts with Powell. Now, inflation could always roar, okay? But no cuts with Powell is the minimum. This is the minimum amount of cuts that I can see happening. No cuts with Powell, 1 cut with the new Fed chair in June. They take a break in July, and then they cut again in September. And that puts you right here. It does. It puts you 3 to 3.25%, right? But that's at a minimum. And you still have the market assigning almost a 34% chance that we don't get that. That we don't get somehow 2 out of 3 cuts with a new Fed chair, none. And it can go faster than that. So with that in mind, I look at the 2-year, I look at the 10-year, and I think pressure is going to be on rates. Not today, though. We got higher yield today. Now, the 2-year is going to be more pronounced than the 10-year. We've talked about it before. You back things up, of course, to March of 2023, and the 2-year is right where we were then. You pull up the 10-year, though, and the 2-year is a full 5 points lower from where you were then. And 5 lower points is a lot higher yield. And what that means is the 2-year is right back to where we were in March of 23 when they expected the Fed was going to cut, and the Fed has cut already, okay? But over that period of time, it has not transitioned to the 10-year. And the curve, the yield curve has steepened, where we're now dealing with a 2-year that's at about 3.45, okay? So just under 3.5%. And you're dealing with a 10-year that's approaching 4.2%. And that's going to be a battle for mortgages. We've seen the home builders getting smacked. Now today you get a little bit of a reprieve, which is interesting considering we have yields higher. Now, furnishings, okay, the home furnishing stocks, the tariffs on furniture, they get a reprieve. You got Wayfair up by 6.5%, Williams-Sonoma up by 5.2% right now, okay? Well, let's look at these home builders. Because, yeah, they've gotten smacked way back down to where we were in the doldrums of 2025. Okay, you accelerated higher, thinking lower yields were coming at us. Not so quickly. Jeez, look at the volume, though. Like a little bit of a bounce on more than that. That is like, even if you take out that crazy volatility, geez, you're not even doing as much as we did like all of last week, barely. So Lennar, 1.4 million today. Yeah, look at this. D.R. Horton, you're up by 0.9%, but barely any volume today. You jump over to KB Homes, up by 0.9% as well. They cascaded lower on the 19th of December on their numbers, just been chopping around. What I'm looking for in these equities, folks, is a sign of strength first, okay? This is one of the things I've been talking about recently more so is, don't feel like you have to get that bottom price where you see an equity cascade lower, okay, and you want to get the bottom tick. I mean, I like where Lennar is right now. We were talking about it last week. The beautiful part about this equity right now is your back's against the wall. You're back right against this April low. You trade below these lows. You pick a price. You have a low out here at 98.42 in April. You go below there. We got some problems, man, in home building. But as I've told you, I think we're going to have pressure on yields, okay? And it might not translate completely, as in the 2-year is not the 10-year. But you better believe that if they're bringing down the 2-year with the new Fed chair or with Powell, then yeah, it is going to matter. And you saw that acceleration and how quickly an equity like this can be up 40% when the market thinks that yields are going to start coming down. And all it did was get ahead of itself. And I think eventually that is going to happen. Lennar right now up by 1.3%, but not on the volume today. Okay, wait for a sign of strength in these equities. Because that was a nice sign of strength. We've pulled back with volume. We want to see another one now. You want to see a reason to buy in, that buyers are back in this equity, and they're not buying back in this equity just yet. All right. S&P's up by 7. Jump around to some of the high flyers. Robinhood up by 2.3%. Palantir down by 5%. Look at this thing. We got some volume today as well. Palantir lower on 50 million shares. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. You heard that direction banner there right on the front page of TFNN. You'll see the direction banner. If you click that banner, folks, 2 great articles. All right, I've talked about these many times, but they're very simple. You click those banners, okay, and they bring you right over to direction. You go under the Education and Insights. Now, you can check out all of their ETFs here, but what I'm talking about is Education and Insights, and then the top one here, Leveraged and Inverse ETF Education Center. Okay, you click that, a bunch of great articles and videos from Direction, and there are the 2 right there that I encourage you to check out first. They get their new Titans, but these are the 2 articles. Okay, and they got frequently asked questions about volatility matters and understanding leverage and how they move. Now, whether it's volatility matters, okay, this one, they really talk about hypothetical, and they're not even hypothetical. They just take periods of time throughout history, and they show you when certain underlying benchmark returns and then how daily investment returns match the longer-term returns of the ETFs versus their benchmark, and how those get manipulated by whether it's a trending market, a choppy market, okay, and how those compare. Check that out. And then that's the volatility matters one. And then on understanding leverage, this is where you get an idea of kind of explaining why that first article is the way it is. As in, it shows you how the exposure versus your total assets will ratchet up. And when that's happening and it's a momentum market in one way, you're just basically gaining additional exposure on additional leverage on a daily basis. And then, of course, on the pullback, that's where the longer term exposure versus the benchmark won't match the dailies. Okay, but check those 2 out. I will post those in the YouTube Tigers Den and the Den, but I think we got a great year setting up for a 2-way market, and understanding what you're trading is so important as well. Okay, but I thought of that. I've been reading, whether you talk about a VIX right now, okay, as we jump, that's sitting at 1462, folks. We hit 1338, which was the lowest VIX had been at all year. 1462 is still one of the lowest numbers we've had all year, in a year where we had extreme volatility early in the year for tariffs. We had some pullbacks as well, but even on this stretch of market where we were chopping around between about June until October, where we got a lot of higher prices, many times we were over 1462, as in volatility is very cheap right now. Okay, if you're trading options, it's something to be aware of, and the market is underpricing right now. Not under, but it's a very inexpensive pricing of volatility in this market. We'll see if that plays out. We got a little volatility today when you get the leaders down 3% almost from their highs. We jump around to the heat map. Let's kick it off with the S&P 100. Yeah, some of those chip stocks. Intel up by 7.5%. AMD up by 5%. NVIDIA up by 1.25%. But not, this winners and losers today in a big way. And then you got Microsoft down 2.3%. Palantir off 5%. Salesforce off 4%. Meta off 1.3%. Financials in the green. Goldman, one of the big reasons you're going to see the Dow positive. Goldman, $900 stock up 4%. JP Morgan up by 0.8. Bank of America 1.6. Wells Fargo up by 1.9. And then consumer discretionary. Let's see, we jump around the NASDAQ 100 for growth. Yeah, look at the chip stocks, man. Qualcomm up by 1.4. AMAT up almost 5%. CLAC up 5.2. Pretty remarkable how you got the chip stocks and then you got information technology. It's all chips. Hyper focused today. AppLovin off 7.6. Palantir, we talked about healthcare in the red. Tesla on their deliveries off by 2.1. And Amazon had a nice higher. Amazon was up by 1.3%, I think, this morning. Down by almost 2% right now. And then, as I mentioned, the Dow. Yeah, Goldman and UNH, 2 very expensive. Caterpillar as well. Look at this. Ooh, it's like a perfect recipe. And Bowen's having a big day as well on a new order. Let's check out Bowen. So, Bowen pulls right back to the 50% of the acceleration since April. Get a nice trade higher December 1st. Check out the daily. Okay. We had some nice strength December 19th. But yeah, you're breaking above this on lighter volume today. 227. Boeing's up by 4.5%. Okay, and look, we're coming right into this acceleration the week of the beginning of 2024, January 8, 2024. Yeah, so you're coming into this bar on Boeing when you rip lower in their earnings in October. The volume's not quite there. Longer term on a monthly. Yeah, not quite on the volume. It's been hammered down, but up from 137 in late 2024. You hit April lows of 128. And we were just up to highs of about 238. You'd like to see a little bit more volume there. Even on the weekly, we're coming into this bar from October 27th when you said mammoth selling. It's a nice sign of strength from this area, 186 to 200. That's a nice floor. So if you're getting into this thing, that's going to be an important bar December 1st. Of course, almost right near the lows in November. And, we're always going to have Boeing, folks. There's only two airplane companies, Boeing and Airbus. And it's in our interest to make sure that Boeing's a competitor, and they are a competitor right now, man. So I keep this one on my radar. You're up to 446 when all was going well. That's when they had the problem with the 737 MAX, pushed the equity down to almost 340, and then COVID drove this thing through the floor when air travel ceased, down to $89. But we've just been jumping around since then. No real uptrend, just a consolidation. All right, look at Uber. So Uber approaching the bottom part of this channel that's been since the end of 2022. We're up by 1.2% today. Jump over to DoorDash, down by 2.6%. Jump over to FedEx. This thing's been on quite a run. FedEx up by 1.3% right now. You got UPS in the opposite channel, but up by 1.7. Gold down by $4 with you. S&P's up by 8. We're coming right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's up by 5 right now. NASDAQ 100 slightly in the red. Gold negative by $3. We came into that opening session higher. You got some selling with some volume. On a daily basis, though, metals, as I mentioned, no real volume in this market just yet. We'll see if it kicks back in next week. And yeah, this tragedy in Switzerland. Some of these videos coming out, I know we know it. But boy, just tell everybody, the video, the sad videos of people with the fire hitting the ceiling, and you can see people standing there almost filming it. Just a tragedy. And almost even made worse by the fact you have videos of people just sitting there filming it as it was starting, not realizing, the dangers of what they were in. And boy, that's a tough one. All right, we jump over to the journal. Global stocks great year was about more than the dollar is, as they put it. Now, whether you're talking about tariffs, okay, the dollar yields, we had some earnings numbers. And you look at the S&P 500, even underperforming the MSCI, okay, it was a mammoth number for them. Now, what did happen is that if you take a look at the dollar, man, okay, it was quite a decimation from the beginning of the year at 110 down to that run at 96. Okay, now what happened is that it wasn't as monumental because all that happened was we didn't get the ramp up that we expected, right? In November, we were at 100. Well, Trump started taking the lead. The market figured that we were going to get tariffs with extreme pressure for inflation, that yields would go higher. That did not play out, not yet, although there's been rapid steepening in the curve. So we'll see how it plays out coming. And then you gave it all back. But right now, we've been chopping around at this low level. And on a longer-term basis on the dollar, okay, the only time in the last about 25 years that we've been under 100, okay, outside of a peak here, is the COVID years of the rapid acceleration when we were the only game in town hiking, right? Yields were through the roof, American exceptionalism. And it was a period of about 3 years where you ratcheted right from 90 up to 115. We backed off. We got there again, then he gave it up. But there's a whole universe. Whoop. Okay. Oh, that's not what I want. I just want to select the box. Oh. One more try. That area. Okay. So if you think that the dollar can't go lower, look at that box and realize that we are at a period that is higher than almost any other period the dollar's traded in outside of the craziness that was taking place during COVID when, thankfully we were the ones that were doing well enough that we could have economic growth at the same time that we could raise those rates to curtail some of the inflation ahead. Because as our dollar strengthened as well, that was helping the inflation problem, because in many countries their currency was weakening, right, causing things to be more expensive. I think the dollar is going to be under pressure, folks, and I think metals are going to have a volatile year coming up, and I think pressure is going to be on them for to be higher. And that is going to play out over volatility, though, because the forecasts are very wide, as they should be. As we wrap up the week in gold, quite an engulfing on a weekly basis. I mean, what was the low there? Open was about 43.69. You were well above that today, but by the end of the day, you engulf it all. And we're 768,000 was last week. What are we doing on volume? Yeah, we're going to beat that with Monday. Even with 4 trading days, we're going to beat that. 300 plus almost 200. That's 500. That's 650. That's 800. I guess we're going into technically going into 3.5 trading days. Jump over to silver. You can see not as bearish. When you do that engulfing, it is a bearish formation. You take out everything. Gold does it. Jump over to platinum on a weekly. No, not quite. Copper, not quite as well. You basically ring the bell of the highs on copper. We trade off a bit. That's your tariff volatility in July. And platinum, I mean, we're right up to the 1 to 1.618 expansion of the run that began in April. Platinum from 860, 878 to 2584. All right, market's rolling over a bit as we got about 10 minutes to go in trading. Keep our eye on the movers. Tesla down by $11 right now. Microsoft under pressure, off 2.5% right now. Google up 0.3%. Robinhood, the banks. Robinhood's now a bank. I kid, but financial stocks are up. Robinhood's up by 1.7%. Palantir. Oof. What I encourage you to do, folks, is just, if you're thinking about selling it all, now if you want to hold Palantir for 5 or 10 years, you hold it for your retirement or something like that, you got a plan, that's your plan. That's great. But if you're trading these equities and you've had a heck of a run up over the last 12 to 24 months, and you're in a position that if it reaches a point you would sell, then pick that point. Because, man, it goes quick. And before you know it, Palantir's down 15% from where it was trading at. In what, 7 trading days? And you're having some volume today for a Friday after the New Year. I mean, look at this monthly volume on Palantir. You do 2.3 billion, 2 billion, 1.7, 1.2, 1.7, 1.2, 1, and then finally you get some selling at 1.2. Not exactly encouraging for the way you want to ratchet up. Okay? On a weekly basis, look at that volume. It runs you right up to $200, folks, and then you get the selling from November. So be careful on Palantir right now. Volume setting up a little bit bearish. Doesn't mean the thing's going to tank, but that's not how you want to see this thing push highs that it's been pushing. And now you get a little bit of selling coming in, as many equities do. A lot of movement for Friday, January 2nd. All right, folks, one more segment. S&P's up by 3. We're coming back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's right now back into the green by 1 point. A little bit of chopping around, and we got some volume coming in there at the close, but S&P's flat right now. NASDAQ 100, growth stocks under pressure, as we talked about. Jump over that NASDAQ 100. And how about all of the information technology, and you're talking about Apple, Microsoft, AppLovin, Intuit, Cisco, Shopify off 2.3, but not the chip stocks, man. Micron up by 10%, AMD up by 5%. Look at the break. ASML up by 9%, Lam up by 8%, AMAT up by 5%. Just a mammoth way to kick off 2026. And here's one for thought. The next class of senators are going to be elected to a position that is going to have a term that will include the cliff for Social Security. Pretty remarkable. Now, senators serve 6 years. But a senators elected in November will actually be there into 2032 when Social Security is going to have an insolvency issue. And when you get down to the nitty-gritty of it, Congress last made changes 43 years ago. 43. And it's going to take 60 votes. Okay? They say it down here somewhere. That you can't do it the way that they just passed this bill right now with a simple majority. and they're going to have to come up with both sides of it. Right now, you get a cap on wages up to $184,000. Employers pay a Social Security tax as well. But yeah, insolvent, and they haven't done anything. But guess what? You're actually going to have politicians that are going to be elected, and within their term, they're going to have to deal with Social Security, and they better. Average retiree, $2,000, whether it's means testing. There's probably a few things that you could do pretty simply. Means testing to one degree. What that means is who draws the line, where is the line, always the toughest battle. Folks, thanks so much for spending your first day of trading in 2026 right here. Have a great night, folks. Have a safe night. Appreciate you being here at TFNN. We'll see you Monday morning, 9 o'clock for the morning market kickoff. Have a great one, folks.